Welcome to the February 10th, 2025 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. Trade wars, run in circles, scream and shout. We're going to cover what could go wrong for investors in 2025, what could go right for investors in 2025, and what strategies are likely to win longer term. Let's cover the drama from this week first. Look at this. You go back to January 31st. Happy birthday, Mom. The Dow was sitting happy near an all-time new high at 45,000 and whoa, 44,000 like that. So U.S. equity index is down 3%. What was happening over the weekend? Tariffs, 25% on Mexico, 25% on Canada, and another tariff on China was coming. Well, then what happened? Look at this. Everybody says trade wars are bad. And the term global recession came up in 2018, and we did some research on that subject, courtesy of McGowanGroup Wealth Management. I'm Spencer McGowan, your financial weatherman and president, McGowanGroup Wealth Management, a team of 10, a team of experts. And we did the research going back to 2018. What happened then? And what was the net result, say, a year later? We're going to think of long-term strategies. I also said what could go right for investors in 2025. That subject's going to come up here too. Now, look at this. Whoa, that was a pretty quick recovery. And we got to near 45,000 at the highs of the week and then a little setback. But you look at that 2-week Dow, well, the Dow's still fine year to date. And why did the markets shrug this off? Well, first, there was a pause on Canada and Mexico when they said, we'll help you with the border. China gets a 10% tariff. Is that bad? I'm about to cover what the likely impact is. And then China said, oh, we're going to charge 15% on your goods. The Dow's up 5%, beating the S&P and NASDAQ at this moment, by the way. That's the year to date on the Dow. So the market's pretty well shrugged it off, and I'll show you one of the reasons why. All right, what's this? This is inflation, right? But it's inflation 2017, 2018, 2019. All right, what was inflation when Trump took office? Well, it was a 2.7%, about 2 3/4, we'll say, right here. Now, then it goes down, right? It goes down as low as, say, 1.75. Whoa, goes up to 2.9. The tariffs weren't announced until June of 2018, and inflation at that point was 2.9%. Well, the tariffs got imposed. It was up to 25% on Chinese goods, and washing machines were 50%. I'm not sure why. Steel, aluminum for China and Mexico. Does that sound familiar, like this week's headlines? Wow. So what happened to inflation? It was very similar to the headlines this week. Wow. Inflation actually dropped over the subsequent year to as low as 1.5. Then 2.3 at the end, which is below where the whole thing started. So, did tariffs have a meaningful impact on inflation? No, not in this case. And what happened to the Dow? Keep in mind, the Federal Reserve is tightening massively in 2018. Yes, they wanted the inflation to come down, which it did. And every time there was a headline, you got two headlines going on. Trade wars, global recession, and Trump's going to cause a big recession, and the Federal Reserve is tightening, run in circles, scream and shout. You did have a 20% bear market cycle, taking the Dow below 22,000 at that point. Now, the big culmination was the last round of Federal Reserve tightening. It wasn't inflation. GDP was just fine. The trade wars, supposed trade wars, the trade negotiations did not cause a global recession, and the Fed stopped tightening. Markets recovered. By the end of 2019, you've gone from a low of 22 up to nearly 29,000 on the Dow. That's the real history, and the Federal Reserve is not tightening. They actually have a couple of scheduled decreases in the rates. But what could happen between now and the end of the year? You get deregulation, you have lower inflation because it's easier to make stuff, and you make more profit because you're more productive. Deregulation could take inflation below 2% by the end of this year, combined with, and I'm about to show you the evidence here from Argentina, combined with spending cuts that actually bring inflation down naturally, and it'll be good for the Treasury market, potentially diffusing the $36 trillion in debt that everybody's worried about. Now, 12.6% is the current growth in profitability for U.S. companies compared to last year. That's on track with what the analysts said. You get double-digit profit growth, you start to address the fact that pockets of the market are overvalued, and you're due for about a 10% correction, which in our opinion would be a great buying opportunity. As portfolio managers, we're already lining up our targets if we do get a drop in the markets. So that's our strategy, and what will win long-term, I believe, higher cash flow from dividends and interest and smart entry points. Right now, we're raising tactical cash. And you can go to networthradio.com, set a time to come down, meet the team, and upgrade your plan. Harrison Smith will do a great spreadsheet for you, and you can see what you're going to look like in 2050 financially, even with a stress test. What is this? That looks pretty good. I want something like that. This is a 77% gain. Well, what happened? Firebrand Javier Milei takes office in Argentina. He cuts government spending by 30%. Now, if I'm a portfolio manager in Argentina, I know that GDP, economic growth, the first component is government spending. He's going to cut spending by 30%, which he did. Now, that helps to bring down inflation, by the way. Well, I would think the word recession means everything's going to go way down. And sure enough, Argentina's economic growth was a minus 2.4%. That is a recession. Wow. And you did have some turbulence, but their market essentially goes from about 50, this is the low-cost ETF that trades on the New York Stock Exchange, it goes from 50 to 91. Economic growth in Argentina, because of deregulation, is forecast to be 5%. Now, when was the last time the U.S. economy grew at 6% for a whole year? 1984, after Reagan's deregulation and a tax cut. Wow. Markets anticipating that, a 77% gain while they had a recession. That's extraordinary, and we'll keep you updated on Javier Milei's reform, lowering government waste and spending, and deregulation, which sounds kind of familiar to the United States headlines this week. Gold. I don't know what's behind this, but it is notable. 2882. Now, the financial media is saying, oh, gold is up because everybody's scared of trade wars and disruptions. But it gives you a history here. Gold hit 1900 back in 2011 because, well, the gold ETF exchange had come out, and at the same time, everybody's worried about inflation because the Fed printed money. Then it goes all the way down to 1100. Now it's 2882. That's your story on gold. I'm not sure of all the factors why it's at a new high, but there's been plenty of global buying. I'm Spencer McGowan, President, McGowanGroup Wealth Management. Please subscribe and join us. Give us a like if you enjoy the content. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, When we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.